Welcome back, and joining us now for today's market read is Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time today. Hey man, I don't know what to make of what's playing out in markets. Really a bloodbath. I can't remember the last time we experienced such broad-based losses in almost every asset class, I guess, barring what we are seeing playing out when it comes to the energy markets. How are you making sense of it all? How are you navigating markets at this time? As I mentioned there, precious metals also taking a knock.
I think the best way is just to, if you can, stay with cash. But yeah, I think the last time we've seen stuff like this, it was, I think, when the Liberation Day, when we got that announcement when it comes to tariffs. But the biggest concern here is with oil prices going up, it's a question of people are worried about inflation. And that being the case, it means we expect more central bankers to be hawkish going forward. And as well, that will affect economic growth. And we've been seeing that at least some economic concerns were already elevated. Now we are talking about geopolitical tension getting also or rising as well. Remember, we still have that uncertainty when it comes to the likes of tariffs. We still have issues that we also had to deal with when it comes to AI. How will it impact, other industries, stuff like that. So this came at a time where markets were already on the edge, having other issues to deal with. And it's very difficult to price and stuff like that. And the metals as well, I think it's also more other than having a firmer dollar, because that they are priced in dollars, so it's becoming more expensive for holders of other currencies. I'm suspecting as well that it might be a question of margin calls, people who had highly leveraged trades, so they have to get money somewhere. So it makes sense, to sell what has been making money for you and get some money from the likes of silver and gold to be able to pay, for any margin call that has been there, because definitely with this kind of falls, definitely there have been some serious margin calls that are out there. But yeah, no one expected to see this happening. I mean, just look into our local interest rate traders. Already they're thinking that come sometime later this month, we might probably get an interest rate hike.
Don't say that.
I promise you, when is the last time you had people starting
goodness.
thinking like that? So it just shows you that the inflation thing is a concern. Here we're talking about the Strait of Hormuz, right? That we know that the flow. But imagine if Iran attacks other energy infrastructures around the region. So that's going to exacerbate the situation.
Yeah, and I mean, it doesn't seem like there's any end in sight, with President Trump even saying that this could go on for weeks. We even saw Qatar, the LNG infrastructure on that side, cutting on production. So, yeah, it's going to be I guess a difficult few weeks as we try make sense of it all, and as we wait with bated breath for that to be resolved. All right, let's move over to what we do know, right? To what we can make sense of, and that is earnings season in full swing here at home. And let's kick things off with Discovery. Despite the bumper earnings, we are seeing that risk-off mood really weighing on a number of these companies' share prices, and Discovery, one of them, double-digit earnings growth, but markets response that is muted. Just take me through what you made of that performance. We are still seeing continued growth from that company, double-digit growth that is as well.
I think, the market reaction is all because what is happening with the general market sentiment. But I guess Discovery, they've discovered their mojo. I mean, look, 12% increase when it comes to non-insurance business. When it comes to new business analyzed premiums, also 12%. And that increase, of almost 27, 28% when it comes to their profits. I mean, that is because of the improved financial leverage, which as a result is translating into lower finance cost. But yes, bank as well continues to do okay. I think the guys that are saying they're signing up quality clients and they're talking plus minus 1,500 per day. That's quite big. So yes, the guys have managed to get their footing right. And yes, with everything being settled, sanity prevailing, noise being out, the guys they stand to do okay. And anyway, they continue to make good money as well from the financial markets, which are doing okay. Because remember, we have premiums has to be invested in the markets. So if they invest the premiums and the market is doing great, by all means, you should see them doing okay.
Quickly, let's look at Shoprite. While earnings have increased and it's managed to gain even more market share, we are seeing that they're dealing with low selling price inflation. And I'm wondering how long they can keep up the current momentum in earnings with that in play, and whether that eventually starts trickling down into margins.
I think it's more of economies of scale, and with these lower prices, it shows that, as you are saying, the inflation sitting at 0.7%, compare that with the food and non-alcohol inflation sitting at 4.7%, they continue to attract more clients because prices are low. Hence, you will see volumes going up. So if maybe their volumes were not going up, then I think the guys were going to have a problem. So I think also with 60/60, I mean, we see those guys, more than any other guys who are delivering stuff out there.
All right, quickly, we've got about 30 seconds. Your stock pick.
I'll go with Ralph Lauren. The guys managed to beat the estimates when it comes to revenue and profits in the third quarter. They were worried about tariffs in Q4, and because people continue to buy those polo shirts and those leather handbags.
Are you wearing a polo shirt? Makwe, let's leave it there. Thank you so much for your time and sharing your insights with us at Market Close. That was Makwe Masilela from Makwe Fund Managers.